Good morning and greetings to you wherever you are in the Caribbean and around the world. We extend a warm Caribbean welcome to you for joining us for the second Caribbean Development Bank President's Chat. Our focus today is marshalling, mobilizing finance for the sustainable development of the Caribbean. We are broadcasting live from the Lloyd Erskine Sanford Conference Center in Barbados and the Eastern Caribbean Central Bank in St. Kitts. Special greetings to the governors and directors of the Caribbean Development Bank who have joined us today. I am Timothy Antoine, Governor of the Eastern Caribbean Central Bank and moderator for today's conversation with Prime Minister Mia Mottley and CDB President Dr. Jean Leon. Now, the CDB President's Chat series is designed to explore development issues facing the Caribbean in a non-technical manner, thereby making them more accessible to you, the people of the Caribbean. Today's chat is quite timely as it takes place against the backdrop of the UNCTAD 15 conference hosted by Barbados this week and will likely foreshadow discussions of similar themes at the upcoming IMF World Bank annual meetings and COP26. This morning, we are delighted to have Prime Minister Mia Mottley, a regional champion and one of the leading global advocates for development issues facing small island developing states. Prime Minister Mottley has a public life of many firsts, including the first female Attorney General of Barbados and the first woman to assume the office of Prime Minister of Barbados. Prime Minister is currently the chair of the Powerful Development Committee, a joint committee of governors of the IMF and the World Bank that helps shape the global development agenda. And if I am not mistaken, I think the Prime Minister is only the second woman in history to chair that powerful committee. Prime Minister Mottley, welcome, and thank you for your exceptional service to our region, especially over the past 24 months.
Thank you very much, Governor, and it is a pleasure to be here this morning with you and obviously with the President of the bank. So thank you. I look forward to the conversation.
Great, thank you. We also have the sixth and current President of the Caribbean Development Bank, Dr. Hyginus Jean Leon. Jean, as he is popularly known, has over 30 years of experience working in the area of economic development in an extensive career that includes over 2 decades at the International Monetary Fund as mission chief for several countries, including Nigeria, the Bahamas, Qatar, and the United Arab Emirates, and as senior resident representative in Jamaica. Jean has also served as an associate professor at the State University of New York and as director of research at the Central Bank of Barbados. Now, a little context for today's discussion. This discussion comes against the grave reality that the COVID-19 pandemic has amplified the significant development challenges of our region. Vulnerability to external shocks, including natural disasters and climate change, rising debt, limited fiscal space, and low productivity present a significant drag on Caribbean growth and development. Our region is also confronted with gender and income inequalities and high levels of youth unemployment. Against this backdrop, the repositioning of our region is imperative. It is imperative if we are to elevate its current development trajectory, and of necessity, we must build more resilient and sustainable economies. Of course, that endeavor requires significant financial resources. I now propose to engage our distinguished speakers on the development financing challenge facing our region. Later in the program, you, the audience, will be afforded the opportunity to pose your questions via the chat feature. So let's get started. Prime Minister, I'm going to pose the first question to you. You are at the forefront of advocacy for repositioning the Caribbean region. What do you see as the major development priorities for the Caribbean in a post-COVID-19 world? Prime
Well, I
Minister.
think that we have to be first driven by the fact that we need to be able to secure jobs and to bring back growth to our economies. Most regional economies that are, and certainly the ones that are tourism and travel dependent, declined by double-digit numbers last year. In our own case, Barbados 17%, and you go as high as 25% in Aruba, and in the Maldives 35%. So that you get a clear sense that what we saw was potentially a generational decline in real terms. Against that backdrop, our first objective, therefore, has to be to ensure that we can grow this economy, but grow it with equity, grow it with jobs, grow it with opportunities, and grow it in a manner that is green. And we believe that as we do that, we're also preparing ourselves to adapt to the climate crisis. So what is needed now more than anything else, where governments have the fiscal capacity to be able to do some stimulus activity, whether it is in housing, whether it is in coastal protections, whether it is in the avoiding of flooding, fixing drains, whether it is in water augmentation and water distribution, because the level of non-revenue water is simply too high throughout the region. All of these are major capital works projects that are necessary to boost infrastructure and to ensure that we have a level of competitiveness again. Regrettably, what will determine whether we can do this is access to finance and access to also fiscal space. Because as much concessional funding is there and you don't have the fiscal space, Governor, you know it better than me. So those are the key strategic blockages that we have to remove if we're going to see some kind of hopeful, sustained activity on the part of the region. I think that the problem is that most countries are in different positions. In our own case in Barbados, had we not completed our domestic and international debt restructuring the month before COVID, I shudder to think where we would be today. So that has given us, for example, the capacity to be able to do and play some shots, for want of a better phrase, during the pandemic, largely because we have the equivalent of, it's probably about 39 weeks of import cover now. It was as high as about 42 weeks a little while ago. That is compared to the 4 weeks we had when we came into office. And that's why we took the decision within 1 week that we needed to deal with the restructuring of the debt to give us that space. And as we heard this week, you're either going to service debt or service people. We need in the Caribbean now also to make the very real point that there has to be some kind of long-term financing, refinancing of the COVID debt assumed since January 2020. And I'll tell you why. If you don't, tell me where countries are going to have the fiscal space in order to pursue the development trajectory that is so critical in order to be able to get the growth and jobs that I spoke about just now. If they are literally crowded out, they're not going to be able to do it. And most of the private sector in the region will not be in a position to have the kind of depth to do the kind of fiscal stimulus that is required on their own, particularly after 20 months of beleaguered activity.
Yes, yes. Thank you, Prime Minister. Very sobering. Servicing debt or servicing people. That's the dilemma. And clearly we have to find a way to service our people. Thank you, Prime Minister, for setting that up so nicely. Dr. Leon, same question. What say you?
I'd probably want to take off from two things that the PM has said. One is that we will not be able to get to the trajectory that is needed for our long-term survival. And I think here, for me, what is very important is we need to start now, but we have to be on a dual track. The first track of what do we do to recover in what we can call the beginning of the recovery from COVID. I don't want to use post-COVID, but at the same time putting in place the important foundations from which we will be able to reposition ourselves for this longer term growth trajectory that the Prime Minister has very eloquently said. And I think for me, the real point is it's based on building resilience. And I say that to say, I think the only way you can have sustained development, I don't want to use economic growth, sustained development is if you have resilience. And that's if you have resilience in the social sphere, to include education, health, the cultural mindset to change us to a position where we begin to see things differently. Resilience in our institutions so that we can get past the implementation deficit that we bemoan so often. Implementation in our productive capacity, get us out of the strictures of economic concentration to one of more economic diversification, strictures of finance. The PM has already said without finance we cannot go anywhere. How do you build resilience in finance? And equally, we have resilience in the environment. And I think we are all seized with the climate aspects. And so how do we put those together, I think, is through the one keyword of innovation. Yeah. And we have to be thinking innovation in each of those buckets while we address the immediate, urgent needs that the Prime Minister has talked about, so that we can genuinely have hope in terms of getting to this longer-term growth trajectory that we are talking about.
Right, right. Thank you, Dr. Leon. So already you are seeing a convergence here. Prime Minister spoke about green growth, resilient growth, inclusive growth, which means jobs, and of course, the need for building resilience, including infrastructure. And Prime Minister Motley, as you spoke, I remember something you've said in the past, which is it takes cash to care. Yep. And I think that is precisely the point you were making earlier when you spoke about the dilemma that we seem to find ourselves in, where we are trying to service debt and also servicing our people, and the necessity to find a way to deal with COVID-19 debt. Here in the ECCU, for example, over $1 billion additional debt was incurred last year as a result of COVID, and with a contraction of 17.17%. So the points are very well made. I want to stick with you, Dr. Leon, on this next question. So I know the Caribbean Development Bank is placing increased emphasis on a more holistic approach to development financing for our region. Help us understand the key elements of this approach and how you see it addressing the financing needs of our region. Dr. Leon.
Yeah, thanks for that, Tim. I think we can simply recognize that in the very same way we've talked about this holistic approach to development, you have to approach the financing aspect equally in a holistic way. And I raised this to make the point that we have to distinguish the stock problem we have, which is our debt overhang, whereby almost all of our countries are essentially in a debt unsustainable situation, and to distinguish that from the flow of new financing that will be required, if anything, to get us to the sort of development goals that we articulated in the previous question. And if we think of it from that perspective, then I think what we can do is to classify this first from the debt side. What is the appropriate instrument to manage debt service, which is more of a liquidity type of instrument, to the type of instrument you need for managing amortization of debt, which will include the entire gamut, as the PM has said on a number of occasions, whether it is debt forgiveness, or debt restructuring, or reprofiling, or even debt transformation. Let's take the case of, say, debt for equity type of swaps. So that's one type of financing issue that we need to be concerned about. And the second element on the flow, which is now the new financing. I think there we need to be looking at what are the instruments that will facilitate the recovery that we are talking about starting now, and the instruments that we need to stay on track on at the same time with regard to the longer term financing. And no one instrument will manage all of those tools. And so when I say a holistic approach, what we are really talking here is we need to see buckets of need, specificities of particular instruments for individual elements of that entire line of financing, and tackle those in the specific way that you will get the most of the instruments in question. And so I think that will span instruments to do with insurance, instruments to do with liquidity, instruments to do with long-term finance. And we could essentially see them as, in the case of not the stock but the flow, what instruments we need for immediate rescue, as we are doing now, what instruments we need for recovery, and what instruments we need for long term. And so I can sort of anchor this by saying, for example, the immediate liquidity on the rescue would be things like the debt service relief that we've had from whether it's the fund or the bank. On the recovery, it would include things like our own policy-based loans, where we are giving, whether it's for exogenous shocks or other immediate needs. And the longer-term finance could be partly PBLs, but more maybe things like crowding in private sector financing to allow you low-cost financing of your longer-term development needs. But we'd need the entire slew of instruments to tackle the problem that we are facing. Yeah.
Right, right. Thank you, Dr. Leon. We started to dive into this now in a very profound way, both by what you've said so far and what Prime Minister has said. And this is the challenge. How are we going to finance the development of this region going forward, given where we are right now? Prime Minister, let me ask you this question. Several of our small and vulnerable economies in the region are experiencing precisely this challenge, accessing financing for crisis-related expenditure, but also for resilient financing, building of resilience in our economies. How can we address the acute lack of access to concessional financing, which is absolutely critical for the development needs of our region? Okay.
I'm glad that you asked that question, Governor, because very often people want to know what's the connection with all these things that you're all doing regionally and internationally with how people living on the street and how people trying to find jobs in our country. You heard me just now speak about the absolute need for governments to be able to lead the fiscal stimulus, and the real problem that we're going to have, which we have to watch, is the fact that we have a large accumulation of savings still, but we don't have the appropriate instruments to be able to ensure that those savings can help us in financing much of the stimulus that we were just talking about. And that bothers me. But at the straight public sector level, we continue to fight the battles, regrettably, that preclude us from accessing the concessional financing. And a large part of it is due to archaic and crude measurements that bear no relationship to our needs or our reality. And of course, you know that I'm talking about the use of historic per capita GDP to determine whether countries should borrow or not. We were fortunate enough to break the logjam for Barbados and Bahamas with the World Bank in the last year. But I'm telling you, the amount of heavy lifting that took us. And ultimately, we were able to point out that exceptional access was given to countries like Latvia and Korea, and therefore there was no justifiable basis for excluding Barbados and the Bahamas from concessional funding at the World Bank, particularly in the middle of a pandemic and particularly in the face of the climate crisis. In addition to that, we have to be able, in our own circumstances, to recognize that there are some structural issues that have caused people to have concern, and we can't avoid it. And a large part of it in the Caribbean, regrettably, has been the runaway expenditure of state-owned enterprises that perhaps don't have the same level of governance protections and oversight as central government does. And we need to be able to modernize that while at the same time not becoming a slave to a system that will not allow us to be nimble and not allow us to facilitate expenditure and the services that are so urgently needed by many of our citizens. The other reality is that we have, as I said, to find ways of mobilizing private funds and savings. I think, Governor, you guys told us that there are about 50 billion US dollars in savings in the region. It might be a little less now because we know that everybody has had to draw down on savings in the last 18 months to survive. But we have to find a way of unlocking at least, in my view, 2.5% of that in order to be able to start the process of finance and development within the region. The difficulty is that there's a lot of nervousness because people are not sure whether existing governments will have to do further reprofiling or restructuring of debt, and therefore they wonder what their position will be in that context. So that I really do believe that the most urgent thing is for governments also to determine what is the message that they want to send to the market, both local, regional, and international, in terms of their debt structure and how they believe they can finance the medium-term to long-term development that is so critical, while in the same time accessing the liquidity to meet the short-term cash flow needs. So a lot of things, but a lot of it depends still on our engagement with the international community and getting them to understand that their international financial architecture too is not necessarily suited to the needs of small states such as ours. And I give this last example as I've done over and over. How can you, the IMF says that in 2020 you basically had an expansion of what, $20 trillion, of which 19 trillion was in the handful of advanced economies, primarily through the use of quantitative easing, which they can do with ease. The DSSI, which was trumpeted as that anchor separate from the common debt framework, was supposed to be for those countries who were low income and who needed to be able to have the flexibility of suspending their debt service. They reckon that that at maximum would have been $12 billion. Well, even if it was the 12 billion, how small is that compared to 19 trillion? And that continues to be the case. The UN Secretary General told us Monday morning that the average advanced economy expanded and was able to use 28% of GDP as a fiscal stimulus. The middle income countries 6%, and low income countries less than 2%, 1.8% I believe. So therein lies the story of really what has happened in the last 20 months, inequity at its worst, and a strangling out. Now some of it may be structural in that both the IMF and the Bretton Woods and the World Bank as Bretton Woods institutions were formed when our countries did not exist. And therefore they're not structured, and Jean, you're better off at speaking at this because you work with them. They're not structured in that way easily to be able to meet our immediate needs. And at the same time, when you look at the fact that a lot of the accumulation of the debt that they're concerned about in our region hasn't come from corruption or hasn't come from profligacy alone, it has also come from the reality of having to absorb shocks decade after decade after decade, whether it was in the loss of productive capacity with the WTO, post-WTO, or whether it was environmental, as we're seeing now. And the reality is that these things have been now judged against us, but at the same time, we need to be able to accept our responsibility for doing what we can to remove the structural issues, while at the same time persuading them to recognize that if you are going to ask us to be able to meet the needs of a climate crisis, then you cannot hold us to a 60% debt to GDP fiscal anchor. You've got to look for adaptation funds that, and preferably grant funds within the context of adaptation funds that will not add to our debt stock, because we don't have the room to add to it. But yet it is because of your greed and wicked behavior that the greenhouse gas emissions are causing us these problems. So this is complex, but it is not impossible. And I think that if we, one, pursue the advocacy with the international institutions, two, settle among ourselves the message we want to send to our own domestic and regional markets as to what we are going to do, such that they have confidence and are prepared to meet us halfway with in terms of the private financing. And three, start to look after the international agenda with respect to adaptation funds, because the truth is that the majority of our public sector expenditure going forward is going to have to be to adapt to the climate crisis, because it looks as though the world will not stop at 1.5 degrees, and we know what happens post 1.5 degrees, it means that we are going to have to take a lot of preventive and adaptive action in order to protect our citizens and our infrastructure.
Right, right. So Prime Minister, I think you clearly setting out your stall here for the region in respect of COP26, where you are clearly advocating for a shift from mitigation to adaptation in terms of financing. Right now, the setup is sort of 20% adaptation, 80% mitigation. We need to switch that formula to give us that access. So I think that's, if I heard you correctly, you are making that point very
Yeah,
clearly now.
the truth is the international community has switched it for us. All of them have said, come, we need to be ambitious, we need to have high ambition. But in truth and in fact, on almost every instance, all of the major countries of the world are still below the necessary ambition that would allow us to stay at 1.5. So if we are not going to be able to keep the 1.5, then now we have to start building, and adapting. Because look at it, they expect 1.5 to be in 13 years or so. 13 years is the blink of an eye, especially when it comes to infrastructural projects. So what are you going to do to defend your coastal economy? Because most of us have a coastal economy. What are we going to do to defend the critical infrastructure? Barbados Light and Power is near the coast. There are a whole host of other pieces of critical infrastructure that are near the coast. Can we afford to go and rebuild hospitals that may be like ours within less than a mile from the coast? These are serious issues. And as I keep saying, what makes it even more egregious, and I can talk as if you and I talking around a shop, if I throw stuff in at your yard, as I've said over, and I dirty up your yard, and you now have to go and find the money to clean up your yard, that is the money you had put down to buy food for the house and to pay the rent or the mortgage. So that you can't expect me to do both. And what makes it worse, had it not been for me throwing it in your yard, you wouldn't have that problem. So that the issue of climate justice and the issue of the morality of what is taking place cannot be divorced. And I don't think Caribbean leaders or Pacific leaders should walk away from an insistence as well that we need to conclude the arrangements for the Warsaw Mechanism on loss and damage, because fundamentally, if this happened within our domestic boundaries, we would be looking to sue somebody under the law of tort.
Tim, if I can just add something here.
Yes.
I think
Yes,
it will be important to unpack the current reality when we start thinking how we use measures. So we talk about this 60% debt to GDP, but I think it's equally clear, those of us who have lived, for example, through hurricanes, that a lot of that debt is maybe simply the money that you are borrowing to rebuild after a hurricane goes by. Part of it is, if you want, related to climate effects. And so we have to be able to make one of two arguments. Either that the 60% is not the appropriate definition to use in countries that have high vulnerability, or we need to unpack. We need to unpack the current debt to GDP ratios by partialing out those elements that are not out of our doing, as it were, the policy-induced errors or failures. Leave those aside, because we can take responsibility for those. But those we are not responsible for, you should be able to unpack those so that you could genuinely say the relevant, effective debt to GDP ratio that you should be accountable for is much, much less than what it is now. And so I think that's a definitional, unpacking, attributing type of concept we should be pushing a little more.
Absolutely. And the point that I want to make, as we do that, we need to, so if it is green debt, put the green debt one side. If it is COVID debt, as I said, put that one side. And let's go back. I'm not going to tire saying it. The British government in the last century understood that it could not service its debt incurred during the war to fight the war, while at the same time going to borrow new money to reconstruct Britain after the war. And therefore it put its wartime debt into perpetuity so that they were not crowded out in being able to access funds. When we say we need a Marshall Plan for the region, and I see that my brother and the president of Ghana is making the same point for Africa, what he is saying and what we are saying is this: Look, and I call it the C's, the consequences of colonialism. We became independent and there was no development package left for us, but we had to deal with the absolute misery of persons who needed housing, education, healthcare, etc. And that has been a multi-generational fight. Similarly, we've had to fight the climate crisis now. We've had to fight the COVID. We've had to fight chronic non-communicable diseases that has caused healthcare to be the largest growing category of expenditure, public expenditure in all of our countries in the last few decades. And in that, I include water, because water is a consequence also of the climate crisis, the absence of the groundwater and the aging of the infrastructure, which of course was built when Britain had an empire and France had an empire, and all we got is countries. So they could finance that infrastructure because of what they were extracting from our countries. So believe you me, we are going to lose more money in the climate crisis than the developed world believes that we are entitled in the next decade for development funding. Now, you can't tell me that we are talking about $5-6 billion for a region that potentially can lose that in 3 or 4 climatic events across 5 or 6 countries. And that is my difficulty with what we're doing. Similarly, Africa is making the same point, that they too feel that the extraction of wealth from their countries over the years left them with a development deficit at the point of independence. They too are complaining that because of the way how the world is structured, and that's why I've asked UNCTAD to start the work on looking at what can be safe assets in our part of the world, because there is no way 2 countries with the same credit rating like Ghana and Greece should be borrowing at excessively different interest rates, largely because one belongs to the European Union that has some safe assets. And what makes all of this even more ludicrous? Who is it that helps keep their safe assets and gives them the reserve status? What do we purchase? Who purchases? All the talk when done, it is us keeping them alive to our own peril. So we have to change the discussion.
We absolutely must. We absolutely must. So, Prime Minister, just a couple of things. I mean, is there going to be an extension for access for Barbados and the Bahamas, for example? I know this is something you fought very hard for. Is there any sense that there will be some extension of that access beyond this year?
I suspect so. I mean, there's been no absolute clarity. Look, when the letters were written last year, they told us that the exceptional access was for the COVID-19 pandemic. Of course, when I wrote back, I said, thank you for the access for COVID-19 pandemic and the climate crisis, because I don't know how you can separate the two. And that is the basis upon which our discussions have been going with the World Bank. I think that there's a sensitivity to these issues. There is a reluctance to settle on a multidimensional vulnerability index, and everybody is saying, oh, everybody is going in different directions and this and that. But I do believe that there is a recognition that vulnerability is one of the most important criteria that we will need to assess in determining whether countries should access funding. And you're hearing it from the UN Secretary General, you're hearing it from the IMF Managing Director, Kristalina Georgieva, who really has tried her best, I believe, and continues to be that voice for the developing world and bringing some level of balance with what we've been getting. So I'm not sure that we'll get the index. We've been fighting for it for 3 decades. But we'll continue to fight. But if we can at least get recognition of the criteria, that's one step in the right direction. And I keep saying, let us claim ground and then move again. And if we can claim ground on vulnerability as an important criteria to be assessed, then we'll move ground towards the index eventually. But what we do accept is that simply the use of GDP, and I think the UN Secretary General makes this point over and over. At the end of the day, when you cut down trees, that's a boost in GDP because of how you spend, but is that sustainable development? Which is the point I think Gene was making in his opening remarks to us. So we really have to be in the vanguard in the same way that previously Caribbean economists were in the vanguard in the late 50s and 60s and 70s of development policy. We need to be in the vanguard of what kind of measurements that we use. And I'll give you 2 more examples of the crude and crass measurements that are used that perhaps reflect more an ease of doing business for the people who use them rather than a commitment to assessing accurately the reality of countries. When this pandemic started, they told us that those countries that had a certain, below a certain level of maternal mortality would get grant finance or concessional finance for therapeutics and PPE. So all like Barbados and Bahamas and others again would be outside, because of course we are now being penalized for being faithful to the development project of being able to sustain our social criteria and our people. Similarly, this notion of blacklisting with the Financial Action Task Force, you would know better than me, Governor, that a large part of it came as a result of the redefinition of money supply from M2 to M3, and all of a sudden a bunch of countries you didn't expect to be doing X, Y, or Z are in a different weight category, being judged by different criteria, and all of a sudden now found negligent and being put on a list, when in truth and in fact it was simply the different use of the definition for money supply that would have caused and precipitated that kind of activity, not anything on our part. So I really feel that we have to continue our advocacy in the international community. You cannot be absent, because if you're absent, they're going to make judgments about you and try to impose one-size-fits-all prescriptions that cannot allow us or do not give us the policy space or the fiscal space to do the things that we have to do to make life better for our citizens and to grow our economy in an inclusive and green way.
Governor, if I can.
Thank you. Yes. Gina, I want to, before you come in, I want you to comment on the private sector financing. So maybe you could add that to your response.
Okay.
Last year, for green bonds issuance, $270 billion in green bond issuance. And as far as I know, none of that came to the Caribbean. And so the question is, what can we do to tap that ESG market for our development? Please.
Yeah, I'll get to that second, but I wanted to follow up on a point the Prime Minister made with regard to the vulnerability. As she noted, we've been at this for the last 30 years, and we have not really made progress. Now, it is not the case that it is not acknowledged that GDP per capita or national income per capita is not adequate or appropriate. But everyone hides behind it out of it being simple. But they do indicate, if you look at the United Nations, the multilateral development group, they talk about the national income per capita, the Human Development Index, and vulnerability. But we do not know how they blend. We don't know the formula. The most we know is that the national income per capita is the dominant metric. So you either graduate once you get past a certain number, or even if your HDI is very high, the fact that your income is not sufficiently there, they will actually discount the HDI simply to put the extra weight on the national income. But I think that the point about vulnerability I wanted to make is, if we keep focusing on just the vulnerability index, multidimensional or otherwise, we will not be able to convince in a very significant way the fact that our seeds are different. And I'll tell you what I mean by this. We have to see the vulnerability measure as not being one aggregate number that we can say, if you get past it, you get, and if you don't, you don't get. Because the truth is, vulnerability has in effect three parts. The first is almost the probabilistic aspect of my susceptibility to some event occurring. And that tends to be where we spend most of the time. But if you think about this well, from a climate perspective, not aggregate vulnerability, climate perspective, the US can claim that they have the same probability of being hit by a hurricane as any of our islands on any one year. And the truth is, the Cat 5 hurricane that hits Dominica hits the US, and so they are just as vulnerable. So when the Canadian at the UNCTAD 15 makes the point that they are looking at the robustness of measures and the universality of the application of measures, we run a problem of can we demonstrate that we are very different. But if you go past the probability side, the susceptibility, and you start looking now at pre-event, the event actually occurring, which we will say now is the magnitude of that particular event, which will depend on not only whether it's a Cat 3, Cat 4, but equally the state you were in before the event occurs, your level of development, how small you are. And the fact that when you are hit, your whole country wiped out, rather than just maybe one state in the United States. And then you link that to what I am referring to as the duration of recovery. Dominica is 10 years before it can get back. The US, even under Katrina, is a few years. So duration is an important...
And that was 1% of GDP.
Yes. Sorry?
Dominica was 220% of GDP.
No, that's in terms of the magnitude, how we measure it. But the duration is the length of time it takes between when you get hit and when you actually get back to where you were. And it is that duration that I think is our single most point of departure, where we can say categorically our seeds are very different. Because it takes you X number of years, 7 years, 10 years, and that's just to build back GDP. Even if you take the pandemic, we just had COVID, which had impacts on social, educational, gender, poverty. When we talk of building back before you get to real growth, it's not just the GDP. It is, in fact, all those measures of development before you can talk of getting back. So that recovery phase, the duration, the persistence of that drag we face is really what we need to measure. And if we can measure that, Prime Minister and Governor, I think we may be in a position to say that there is need for an adjustment to this per capita GDP, which is more in the nature of a compensating variation. That yes, we are $10,000 per capita today, but if it will take us 5, 7 years after a hurricane hits, or we have a pandemic, to get back to exactly that same per capita GDP in 7, 10 years' time, then this is not growth to begin with, but it's equivalent to saying that our per capita GDP is in effect $2,000, because it will take you 7 years to move from 2,000 to the 10,000 that you would be back after that point in time. And so we need to measure this, propose it, and augment the vulnerability index as a means of actually making that case as to why we are different, why we need special treatment, why we need lower case financing, because we are not growing during that recovery phase. And if I can get to the question you pose, Governor.
So just before you do that, so
Yes.
I assume, Dr. Leon, as president of the CDB, that you are now, in fact, initiating that work that you just mentioned.
We have initiated that work, and we are trying to take it as far as we are going. We are looking at partnerships. We are talking with the UNDP. We are speaking with the beginnings of talking with the Global Center for Disaster Preparedness in London. We are raising it with, at least we've started with people at the IMF. But it is that recognition that you need to unpack, as it were, this vulnerability into its three dimensions and highlight the fact that where we really fall short is on the question of duration, that recovery phase. And that is really our biggest hurdle, and what distinguishes us from, in my mind at least, and climate is very clear, from a developed country, large country like a US, and us in the backyard of the US facing exactly the same susceptibility. And if I can go on to the point you made of the ESG, I think I want to start by noting, Tim, that we are in fact speaking in terms of our development agenda, ESG. It is already there. When I say a holistic approach to development that talks of the environment, talks about the social, talks about the governance, all of those in resilience measures are things we have to do. Now, I think our problem is we have not maybe gotten to the point where we have enough awareness. As, for example, you'd see blanketing in the waves in the US, where people want to be socially responsive by wanting to have stocks in ESG related criteria. We would need to step that up in terms of awareness. But equally, we need to accept that our development agenda needs to be inclusive. And the moment we start doing this, then I think we will start utilizing all our efforts into projecting this as a necessity. So for example, now at the CDB, we have the climate vulnerability impact assessment. So that takes part of that into account. We have your economic, social impact analysis, which takes that into account. We need to add on that a governance assessment. If you can do those and mainstream then you could say almost every project you are involved in, whether it's a pure project or a policy-based loan, we should have those elements in there. So that as we build the capital markets in the region, and people start now getting into stocks that are going to be based on those development areas, then in principle, you will actually get that awareness and start getting people that would now be able to tap into the very ESG market that we are talking about.
I think one of the key things, Governor, is that we need to be able to embark regionally, and I've tried to start it here in Barbados, a serious project on financial literacy. We are not going to move 50 billion US dollars in domestic savings that are getting next to nothing in terms of interest rates unless people feel confident about being able to understand and interpret how they can invest and where else they can invest. Now, the truth is that I should also have included earlier when you asked me about the development opportunities. And when you say post-COVID, the truth is that we believe that COVID is a marathon. And it's not really going to be anything called post-COVID. It's going to be along with COVID. And the other areas, of course, are digitization and also the creative economy, that we're going to have to leverage the ability to reach the rest of the world in order to be able to earn in those two areas. And I'm not sure that we've done that sufficiently. So I think we have some work to do on financial literacy in order to be able to improve the appetite of our citizens to participate in risk in terms of the types of investments that they undertake. But at the same time, I think we need to expand the pool of opportunities from just simply infrastructure, green infrastructure, but also start looking at how we can do far more with digitization as well as the development of software, etc. And then, of course, there's the issue of food security, and there's the issue, which I now talk about, nutritional security, because of the problem with the chronic NCDs. Cheap food that is bad food is no good food. And then, of course, as I said, the creative economy. So there are multiple things that we need to walk and hold hands doing. And I feel that there really needs to be far more functional cooperation in the region than currently exists. And that's one of the things that the revised Treaty of Chaguaramas was set up to be able to facilitate. At the very time when we have the ease of communication, instantaneous communication, we have seen less functional cooperation. And I think that that is regrettable, especially since in almost every instance, each one of our countries is underpopulated.
Yes, indeed. So Prime Minister, you know, you on this question of mobilizing domestic savings, the actual experience we've seen in the ECCU in the last year is actually that deposits in the banking system actually increased. So while we would have thought, and we have been monitoring liquidity very carefully in this period for obvious reasons, perhaps because some people are unable to travel, you know, we actually saw an increase in deposits, meaning that liquidity actually, excess liquidity is even higher, as counterintuitive as that may sound, which basically strengthens your point that we now need to mobilize some of these resources. I think you said 2.5%,
At least.
you know, or 50 billion, to get us moving. And while I agree with you on financial literacy, and by the way, globally, only 1 in 3 persons are financially literate. 1 in 3, which means 2/3 of us are not. But while we are doing that financial literacy program, I keep reminding colleagues that our people are investing in cryptocurrencies. So we're worried about them harming themselves, and for good reason. But people are taking more risk than perhaps we even realize. And therefore, I think we can and should make the case for investing more in ourselves, in renewable energy, for example, in food and nutrition security, for example, to be able to, as you have both said, elevate the development trajectory of our region. So I feel that we have been a little too conservative with respect to engaging people on mobilizing these resources. And I think based on actual behavior, there's an opportunity for us to step in, step forward, and really hold hands together, as you said, to bring some of those resources. So that even as we're making the case internationally, we are bringing our own domestic resources to the table and joining hands, hopefully, to leverage whatever comes our way. So thank you for that. Which leads me to ask the president of the bank, Dr. Leon, about renewable energy. So Dr. Leon, talk with us for a moment, if you will, about how you see us addressing this issue of renewable energy. And you look at our countries, everybody has a very ambitious plan for renewable energy transition, but the transition is slow. And one of the main reasons, or one of the main factors that we keep hearing, is that the upfront costs for doing renewables, those costs are very high. What can the CDB do? What can we do, Dr. Leon, to accelerate our renewable energy transition?
Yeah, I think we can start by, as you say, renewable energy penetration clearly is low. And part of that is maybe a legacy of a costing issue, but part of it is also we have not managed to crowd in the private sector adequately to allow the advancement of the renewable energy line to actually proceed. And there are a number of ways, I mean, one can begin to look at this. One of which, for example, is something has happened in the OECS that you're aware of in the geothermal line, whereby you have interest subsidies that can help, or for that matter, partial guarantees that can be used to help smaller MSMEs embrace renewable energies. But all of those things are ultimately costly. I think what we need really is to crowd in the private sector. And you did mention that we have 40, 50 billion, as it were, of resources. The question in my mind really is, how do you get the private sector to want to engage at a reasonably low return to allow the advancement, whether it is renewable energies or in terms of climate, your green bonds, for example, or even in the creative industries in the orange space. I mean, all of those are just colors, but ultimately they are all trying to do the same thing. And the idea is to marry, align private sector needs or demands with regard to risk return to what they believe will actually generate from the activities you're trying to undertake. And I think here we have a market failure. And the market failure arises because of, again, it's partly related to climate-related issues. Our perception, or the market's perception of our risk, is that much higher than you would be able to command for a lower cost subscription of any type of security to actually generate the funding that you need for those particular activities. And so we need to start thinking, in my mind at least, how do you bridge that? And one possibility I think we can look at is the whole concept of contingent state instruments. I know, Prime Minister, you're very big on resilience bonds, which clearly is one of. And resilience, whether it be in green, in yellow, is the same. Resilience is simply how do we get to that point where we can utilize funds to actually build in a way that is much better. But what if we could think of contingencies in a slightly different way? And I'll give you an example. Jamaica, after the IMF programs in 2010-13, undertook a number of reforms. And those reforms, which at least have been seen as being very progressive, are now such that the risk profile of Jamaica is such that there is demand for lending, as it were, into Jamaica because the risk profile has changed. So I want to start from there by asking, is there a way that we can reduce that risk profile of our countries,
Yes.
and whether we target that into renewables, as you are asking, or in climate, or in creative industries? Is there a way we can actually do this? And I think we can, if we can recognize the interactions that we talked about. For example, we need good governance. We do need to reduce our implementation deficit. We do need to have say, strong social frameworks to allow us, whether it's security or otherwise, to say you have a holistic economy that is actually good. What if we could call all of those reforms? And is there a way we could think of pricing those reforms such that we could say, if we were to implement those reforms, then in a sense the risk profile of the country, that space would be reduced. Now, if you could do this, but of course you need the funds to actually start you, is there a way we could get the private sector, whether it is domestic, regional private sector, or international private sector, to recognize that if you undertake reforms, but undertake reforms in an ex-ante way, you can actually benefit from lower cost. So again, to anchor this in the following sense, I'm going to borrow, again because I need a lot of money, 200 million to do a renewable energy project. I do know I need the plumbing, the infrastructure of whether it's the governance or the other elements to make this continue in a very good way. Supposing I bundle that, let's say through joint co-financing with a CDB, and then we argue that you will undertake some implementation, some governance elements as part of your policy. But the rate at which you would have contracted that 200 million is 8%. And supposing you agree to tranche it, because it's going to be rolled out, you tranche it in amounts of, say, 50 million. Then after the first 50 million, you start to pay. You're paying at 8%. But because you have actually undertaken and delivered on a particular reform, your rate will be reduced from 8 to 7% ex post. So that your debt service, when you start to pay, is not going to be the 8, which was before, but say 7% at that particular point. And at each tranche, you can actually benefit from engaging, implementing that particular reform. You can, by extension, engineer a particular 200 million project that was initially measured at 8%, but end up being repaid at 4 or 5%, and you end up with a win-win situation whereby you incentivize, whether it's the government or the private sector, to actually deliver on results, and you reward that result by a lower cost of capital, which is now commensurate with the reduction in risk. So these are some of the things I think we can start thinking about. I mean, I'm sort of talking this day, it's not yet fully clear in my mind. But if we could explore those, and we can get now our private capital markets to understand how that risk is being reduced through the implementation of a holistic approach to development, we may very well be able to build that market, engineer lower cost financing that we need, and at the same time target those particular funds in the necessary direction that we want to go to generate this overall development that we are talking about.
I quite understand it. In fact, the truth is Professor Passad has been working with us on the whole issue of GDP-linked bonds going forward, because we recognize that if we can give the market the assurance that there are certain targets that you can meet, whether those are GDP-induced or whether those are induced in the way that you just described, with the reduction of risk by taking governance reforms or other things, it is a recognition that the market will reward you for going in the right direction.
Right.
But I also wonder about the extent to which we need to push harder across the region to do what Grenada and Barbados has done with the natural disaster bonds. And the reality is that as a lawyer, I find it difficult to understand why more people are not accepting it, because the one thing that those natural disaster bonds do is to provide certainty. Certainty as to what happens if X, Y, Z happens in terms of an event. And that way the lender knows what his condition is and the borrower knows what the condition is. You get, in our case, 2 years flexibility by having that fiscal space for 2 years, by back-ending the interest, and by having a moratorium on the principal. And it makes absolute sense. I'm hoping that the Inter-American Development Bank will take it up. But, Mr. President, I'm hoping that the Caribbean Development Bank will also take it up, because it gives you certainty rather than wondering, will this country be able to service this debt after this particular climatic event? And it is that very uncertainty that pushes up the price of capital. So why don't we have the clause, reduce that as one of the risks, and upfront give us the benefit of the the reduction of risk upfront in the cost of the capital, while at the same time giving us incentives, as you've just referred to, that we can work towards, or as I said, with GDP-linked bonds. If our GDP continues to grow, this is what happens to the interest rate. If it falls, whatever. So I hope that we can be innovative. I think that we've been talking too long, and it's a question. And I know that COVID really has affected the regional work agenda. Swear to God. We had hoped to see far more work on the growth and resilience bonds, and also on the stabilizing of the Regional Development Fund. Because in a single market, as we know, you have winners and losers. And if we don't stabilize the Regional Development Fund at this very time when many of the LDCs need access to capital, they're going to start to pull away from the success of the potential success of the project of the CSME. And we don't want that. So we need to be able to go beyond the commitments of governments to populate that fund, and to see and to capitalize that fund, and to see how we can be using innovative instruments while at the same time encouraging the international community, who have put us in this position with respect to the climate crisis, have left us in this position with respect to the consequences of colonialism, that there needs to be some kind of recognition. Yes, we're going to help ourselves, but we need you to put some money, as I said, a Marshall-type plan in the Regional Development Fund to help us with the regional project that stabilizes us for lack of scale. And that is the single market and single economy.
Right. So Prime Minister, thanks for that. And I just want to underscore the point you made earlier about the need for the climate resilient debt instruments. Barbados, I believe, is now the largest issue in the world of climate debt instruments.
Yes.
Of course, Grenada did. That's an innovation it is. And to your point, we need to see the multilaterals come on board. So, Mr. President, I'm absolutely agreeing with the Prime Minister. CDB has to take a lead where this is concerned. IDB must do the same, and we need to press the IMF and the World Bank on this. Because although they're multilateral and are preferred creditors, given the situation that we're in, as the Prime Minister just said, give us the certainty to know when a shock does come, as they will, as shocks will, there is a predetermined arrangement that allows us to invest our limited liquidity into recovery. 2 years in the case of Barbados, and then you resume. And the only exception I would make, if I may, is for the short-term debt instruments. So your treasury bill, your 90 days, your 365, I would exclude those. But beyond that, I think those need to be in play. So I agree with the Prime Minister on that, CDB. Dr. Leon, we want you to step in on that one. Now,
just before you go, Tim, I
yes,
want to
sure.
piggyback. I want to piggyback.
Just before you come in, Dr. Leon, just to say, I'm gonna hear you in a minute. I just want to cue the audience that we're going to be taking your questions in a minute. So once Dr. Leon concludes his response, we're going to go to the audience to check some questions. Dr. Leon, back to you.
Yeah, just a quick rider. Prime Minister was talking about the need for us to work together as a region. And I think I just want to emphasize that. We have to put the regional cooperation or even regional integration back on the agenda 100%. And I've said it before and I'll say it again. We have to take CSME to its rightful conclusion now, not next year, not the year after. It has to start now. And an example of this in terms of this functional cooperation that we are talking about. And I'll just sort of whet your appetite here. I know, Tim, you'd be excited about that one. We have 1.7 almost billion SDRs that have just accrued to the BMCs that the bank actually lends to. That is going to be sitting in the IMF SDR department, let's say, as of now. What are the options we have? Option one is each country can say, I'm going to draw down my SDRs and use it. So proverbially, they are going to eat their assets, and after they've eaten it, they need to worry about the digestion. Alternatively, we have an opportunity to be able to say, what if we pool all of that 1.7 billion SDRs, let's say 2.5 billion US, and now invest it into an equivalent reserve asset type of instrument that could be issued a CDB or elsewhere, but let's just say a CDB for now, that could now be used through the higher rating, stronger link with the capital markets to now energize a crowding in of that very capital we've been talking about before. You may be able to think immediately of a pool of funds that could be as much as 5 billion US or even more, that could be used to help drive this very development agenda, whether it's green, blue, orange, that we are talking about. But it will call for, and Prime Minister, if you're willing to go with me on this, we could talk this and push it more. It would call for us recognizing that individually, if we used our SDRs, the allocations, or even if we left it there, we are much worse off than we could be if we were to pool and now utilize those SDRs through the mechanism of leverage in a way that now helps build the very capital markets that we're saying we don't have. But it calls for collaboration, cooperation in a regional sense.
And speed.
And speed.
Because one of the difficulties, and I'm being brutally frank, that I think the bank has to come to grips with is the length of time it takes to process and to do things. And governments will come and look at this and say, which one is going to work quicker and faster for me, which one is going to ease my immediate pressure, even though we want to be able to build in the medium to long term. But we will certainly sit down with you and look at it, because I've been arguing for the last few years that we need to use what we have to unlock other funding. And that's effectively what I've heard you say. So that I'd like to invite you to put something before the heads as soon as possible, and let us look and discuss it, because quite frankly, to the best of my knowledge, a number of countries are making determinations now as to how they use the SDRs. And I mean, I would like to be able to use ours in a way that has a meaningful legacy. Barbados has argued we want to be able to go into the life sciences. We want to be able to have, for example, there's no reason why the region and we couldn't go after a bottling plant or a manufacturing plant for vaccines and other pharmaceuticals. Yeah. Because when I look at how many people we've produced out of the University of the West Indies in the last 5 years, it's about, what, 6,000 people in sciences? And where have they gone? They're not doing the kinds of higher order, higher value added things that they would love to do if we were in a larger economic space and where those opportunities were there. So let's sit down and talk. I think, look, You know, last night we had a discussion with the central bank, and the governor of the Central Bank of Kenya was making the point that we go through periods of time in history where very little happens in long periods of time, and then you get a burst of activity in a short period of time. I actually believe that we are in that space where we can have a burst of activity because of the existential crises that we face, because of the fact that people are more willing to deconstruct and reconstruct, and therefore come up with solutions that are appropriate to the time and the circumstances of the individual nations. And I regret that we've not made more progress regionally with respect to the Caribbean economic recovery transformation, because I still believe that if countries go together to the international community, they will be that much stronger than the 1-1-1-1, because what is the example of colonialism? Divide and rule. And therefore, if you have each little country going to negotiate and going to think, they're not going to get the best possible deal as against our going together as a regional community. But for that to happen, it needs give and take. You can't get exactly what you want. It needs give and take. And that is the price that we all have to pay. We settled among 93 countries, 195 countries in the world with the Bridgetown Covenant. We settled with the spirit of Speightstown, which is the political declaration. What is clear is that there is an almost universal understanding of the crises that the world faces at this point in time. There is an overwhelming consensus, but not unanimous, as to what the solutions are. I keep saying, let us work with who is there and let us build on that. And that is why the Coalition of the Willing continues to be the operative mechanism for me and for all of us as we go forward. And the rest will come or they don't come. But what we can't do is to stand in one spot waiting for everybody, because the pursuit of perfection, as we know, is the obstacle to progress.
Yes, absolutely. So, Prime Minister, I just thank you for that. And I want to say to you, Dr. Leon, that the Prime Minister is right. Countries are making determinations about how they're going to use their SDRs. And for those who are listening, special drawing rights. This is a special currency issued by the IMF. They did a special issuance recently to help with COVID. And countries now need to decide how they spend. Some are already spending. So I fully endorse or encourage the expedition of that submission to try, even if it's a proportion, Dr.
That's
Leon,
right.
even if it's a proportion, it would make a difference. So you are clearly exercised on these issues. You are thinking about them deeply. We're grateful for that. And I think given for us to perhaps move quickly, but something will have to come in short order. If not, I fear most of those funds will not be used for any legacy, but for debt, the repayment of the same COVID debt.
Yeah.
And that would be double tragedy, if I may say. Now, let's take two quick questions.
I'll commit to that.
Right, thank you. I think that's a key takeaway from our discussion, our conversation.
So will we. We'll look at a portion.
Good, very good. Thank you. So here's a question. Can we use a funding facility through the CDB with funds for investment provided by our respective national insurance systems with a respectable rate of interest? Can we create a funding vehicle through the CDB, leveraging Social Security funds, and deliver an acceptable rate of interest?
Well,
Mr. President,
certainly
what
the
say you?
Social Security funds need additional opportunities to diversify the risk. So I would
Yes.
hope so. The president needs to tell us whether the bank is prepared to find an instrument that will give them the confidence, and quite frankly, also a mechanism that will deliver to countries quickly, as I said, because, for example, we've had to recapitalize our Social Security fund because of the extent to which it was drawn down last year, both on the unemployment side in particular, but also the fact that it was receiving reduced income, obviously because of the high unemployment. And then for many years, the National Insurance Fund of Barbados was precluded from being able to invest outside, largely because the last government used it to finance its domestic activities here. We're trying to get back to a more balanced position that has a more diversified portfolio, and therefore it is something that we're more than prepared to discuss.
Yeah, Tim, I think the short
Right.
answer to that has to be yes. I think the question really is what's the instrument and how do you go about exercising it? Because CDB has been in the market borrowing funds overseas to supplement its own funding through, say, the sovereigns, that the shareholders. And so in principle, there is no difference between borrowing outside versus borrowing from within the region. I think really when you say a reasonable interest rate, I'm not sure what that translates to.
Devil is in the detail.
But no,
Yeah,
let's agree. Let's agree. I think that this is part of what we need to do. How do we create instruments? How do we crowd in our own local, regional capital markets as a means of providing the financing we need to be able to drive that development agenda that we talked about?
Right, right, good. Here's another question. So the reference is to NCDs, and Prime Minister Motley spoke about that earlier. The reality is that almost 8 in 10 deaths, 80% of all deaths in our region are NCD related. The chronics, diabetes, hypertension, heart disease, and so on. And the question is, can we direct some of our development financing to re-educate our population on preventative health care, essentially to move away from the ultra-processed foods and to drive local agriculture and healthier diets. The issue, Prime Minister, you mentioned earlier, the nutrition security. Because I suppose the questioner is really pointing to the fact that it is costing us significantly, both in terms of lives as well as the public finances, to have to treat these illnesses. And we obviously spending significant sums which we do not have, and we are losing people in their prime, and which is of course a drag on the economy in and of itself. Is there anything we can do in that regard?
Absolutely. I mean, look, COVID lays bare everything, and that's why look who's most at risk in COVID. Unvaccinated persons with serious comorbidities, invariably the chronic NCDs. And that's why the region is having a time of its life now. We have to have a multifaceted approach to it. We have to do public education and sensitization from as early as primary school. We need to be doing it with pregnant mothers and to get back into the communities and to train pregnant mothers before they have the children, what kind of habits you want to be able to inculcate in your children. I see the cameraman giving me a thumbs up for that. We have to be able to also make sure that those people who are already suffering from the chronic NCDs, the diabetes, the hypertension, etc., that we don't leave them to their own devices. And what do I mean by that? I've insisted in the last 18 months, and we did it not through the polyclinic system, which has its own public health and community outreach, but I've insisted that the Queen Elizabeth Hospital now, which is a tertiary institution, that they too recognize that they need a series of a number of community nurses. And in this instance, we've gone for 40 community nurses. And when you look at the numbers, they should ultimately be able to handle over a 2-week period about 50 patients, which means that we want to get the 2,000 most seriously ill patients with diabetes or hypertension or heart problems or whatever, and go to them in the community. Because believe you me, and I canvass, and anybody who is in people's houses canvassing and mixing with people know that, first of all, the level of compliance with medication is not necessarily the highest. Secondly, the level of compliance with what you should be eating is not necessarily what it should be. And it's not that you can cheat out sometimes, but you need somebody behind you all the time telling you to walk the straight path so that we can have a higher degree of compliance and so that we can reduce the number of sick persons attending the hospital. And I feel that it was an investment exceptionally well worth it, because if I can then reduce the pressure at the hospital by them going into the communities as outpatient representatives of the hospital. That is separate from the polyclinic public health outreach work, which must still continue. So that's why I said that there has to be a multifaceted approach. We've taken far too long on this issue of labeling, but I accept the difficulty, and it's largely because our import food bill is too high. So if we import it, we can't tell people what to put on the labels, and if our market is too small, they ain't putting it on for us alone. So therein lies another problem. And then we go to the race to the bottom, largely because every country is interested in what is cheapest, but what is cheapest may not necessarily be what is most effective, because in the long run, it's putting our people in the hospital. So the level of salt that they're taking in processed foods, I maintain anything in a tin, something got to be in there to keep it fresh. Something got to be in there to make it capable of me being able to eat it. And I use my own experience and my own difficulties in managing weight to recognize that it is whenever I have come off of processed foods that you begin to see the difference. Once you start to eat healthy, once you start to eat small, healthy, and regular, you see the difference. The problem is what is affordable. Now, we also forget, too, that previous generations didn't only rely on one job to live. And there's a sense in which the post-independence culture of the Caribbean has been consumed with the culture of contentment, such that we forget that we have an obligation first to ourselves and our family in order to be able to do something too. So nothing wrong with your hands, grow a little food in the backyard. Nothing wrong with your children's hands or feet, let them carry out the stock again, whether it's black belly sheep, whether it's dealing with chickens, whether it's dealing with pigs, whatever it is. We have to recognize that we have to get back to taking some level of responsibility for ourselves, our family, our community, while at the same time working with the government to be able to do these larger things that will facilitate the public education, the support services, both at the primary healthcare system, but also in the tertiary healthcare system.
I just want to add one quick bit on this.
Sure.
Because you entered the question, Tim, via the costing side, asking whether you could divert more funds to it. We should not be in a position where we believe the only institution that should be responsible for reducing NCDs is the government.
That's the point.
Okay, and that is maybe where we need to change part
Shift
of
the
that
balance.
dialogue. Because if you think about it well, yes, the government is picking up the tab at the hospital and the clinic, but the person who works in the firm who is not able to go to work, or who is working but not giving their best, the firm is also suffering. And we need to start getting those institutions, the corporates, not only to where they are capable of adding, do some of the things the Prime Minister is saying by immediately going for less salt. For example, in their line.
Stand-up desk.
Exactly, stand-up desk. And equally to be doing the outreach, getting people to understand that it costs them as well. You know, not just the government. We are focused too much on the government. And as the PM says, we have to take some of that responsibility. First as households, equally as corporations.
I agree with you. And by the way, I mean, connect the dots, because when we don't do what we're supposed to do, we're driving up our health insurance bills, our health insurance costs. So when people ask why are these premiums going up, part of it is because of the incidents. Were we to reduce NCDs, we would potentially see lower insurance costs. Now, of course, it's not just dollars and cents, but that's what the person offered, so that's how we let in. But thank you for that perspective. I am. What shall I say? We have a few more questions, but we're out of time. And let me apologize that we're not able to take more questions. We were going to try to touch one on cultural and creative industries, but we are out of time. And so I'd like to give you first, Dr. Leon, President of the CDB, and then Prime Minister Motley, an opportunity for your concluding thoughts.
For me, I think one is, we, as a region, we have to recognize that time has run out. Yep. We have to act, and we cannot keep acting as atoms. we have to see the benefit of working together as a region, supporting each other both in thought, in deed, in action, because I think that's the only way we come out of this in a way that is going to be sustainable over the long haul. And second, to see the whole development process not as a slice, as I keep arguing, but as a complete ecosystem. We cannot leave the people behind. We can't leave the institutions behind. We cannot leave the planet behind. We cannot leave our whole productive activities behind. It has to be seen in its entirety. If not, then I think we'll end up moving along again at a tension with one or more pieces moving ahead of the rest. So that will be my closing message, the holistic aspect and seeing the benefit of working as a region as opposed to individual pieces.
All right. Thank you, Dr. Leon. Prime Minister Motley.
Thank you. I think the President is absolutely correct with what he said about the time for talk is over and that there has to be action. But the action has to also recognize that the critical foundation has to be partnership and compromise. We are not going to get anywhere if we continue to want all that we have staked out for, because we just don't simply have the capacity to do it on our own. And I hope that within this region that we are going to try to remove a few more obstacles, because right now there may be opportunities in different parts of the region, but the capacity to exploit them may be constrained. When all is said and done, while the tourism and travel dependent economies are suffering, Guyana is going through an explosion of growth as a result of its recent discovery and the confidence in what will come to them with the oil and gas, but also recognizing that they are strong too on renewable energy and on the carbon neutrality because of their commitments with the carbon sink and their forests. I believe that we have equally to recognize that we have to be global citizens and we have to look for opportunities outside of this region. But it is going to mean trying to give our people and our companies backative in whatever way, whether it is through technical assistance and strengthening or whether it is through increased access to capital, blended with state capital, or literally creating platforms where people who don't know each other can come to trust each other because of the nature of the instruments. And finally, I really, really feel that we have a voice to lead in the world at this point in time because of the nature of our experiences and the extent to the fact that we're in World War III. Let's make up our minds on it. We have multiple crises that are the equivalent of a world war, from the pandemic to the climate to the violence epidemic in the region. And that is also a major problem, as we all know, to the difficulties with the other aspects of the healthcare system, as we just talked about. And if we continue to fight it as if we were not in a pandemic, or sorry, as not in a war, then we'll lose the battle. What I find is missing most in the region is urgency and a willingness to deconstruct and reconstruct so that we can be far more streamlined and understand that if we do things the traditional way, we're not going to make the distance and we're not going to win the war.
Thank you, Prime Minister. Wonderful night. Motley. Yes, we have issues, but there are opportunities. And if we come together in this moment, the urgency of now, we can in fact make a difference for ourselves, our people, and we can make our voices heard in the rest of the world. I heard as well the fact that we must demand a system with justice. And so we will be taking those messages to the IMF World Bank meetings and COP26. I also heard that we can and must take personal responsibility for our health and for some of our actions, even as we seek to mobilize resources abroad. And we talked about domestic savings and what we can do there. The president of the CDB committed to put a proposal through Prime Minister Motley to the CARICOM heads along concerning the possible use of the SDRs or a portion thereof to create some kind of legacy development impact for our region. We look forward to that. The president of the CDB also committed to take another look at how we articulate the vulnerability index and to perhaps bring some additional dimensions to the table, duration in particular, to try to change the conversation and create some momentum within the global community for seeing us not as too rich and therefore not worthy of concessional financing, but recognize the share vulnerability and give us access to those key resources. Ultimately, I heard that together as a region, there's nothing we cannot do if we come together, with God's help and with some friends in the international community. And so I want to, on behalf of Prime Minister Motley and on behalf of President Leon, who, of course, initiated this conversation, to thank you all for joining us today. Let us stay engaged. This is our region. This is our home. We must have the biggest interest in ourselves. And yes, we are richer than we think, in ideas, in resources, and in social capital to move our development forward. Again, my special thanks to you, Prime Minister Motley. I know it's been a brutal schedule. I don't know how you do it, but we're grateful for all that you're doing, not just for Barbados, but for our region and for all SIDS. And President
Thank
Leon,
you.
clearly, you are thinking, yes, Prime Minister, thank you. Thank you. We really do appreciate what you're doing. And President Leon, clearly you are thinking about these issues very deeply. And I just want to say that in the ECCB you have an ally, and I'm sure together with other regional and international organizations, we can make a difference. And to go back to Prime Minister Motley's point, the urgency of now. Now is the moment. This is our time. Let's make it happen. So again, to all who joined, for all of the supporters, for all of the technical support behind the scenes at the CDB, at the ECCB, and wherever else, thank you very much, everyone. God bless you all. Until the
Thank you
next
very
time.
much.
Take care.